Welcome to the podcast, to the Fintech podcast, Ashish. How are you today?
I'm very well, Michele. Again, thank you so much for the invite, and it was great to see you last week in Riyadh.
It's a pleasure. It's a pleasure. It has been a very, very great event, and I love to see Riyadh. I love to see Money 2020 in the Middle East. But first of all, would you like to give us a short introduction of yourself, your personal background, and of course, a general introduction of PayPal Ventures?
Of course. Again, I think happy to start from a personal journey and what brought me here. This is my 10th year in London, and I can tell you, this was not the plan initially, right? It was like, hey, let me just explore the greatest city and see if I enjoy it. And there you go. From 1 year, it became 10 years.
Wow.
I grew up in India on my education, my undergrad from IIT, my MBA from IIM. Again, everything was India. The turning point for me really happened when Deutsche Bank hired me from campus, and back then I got to work with the gentleman who was leading payments M&A for Europe. And back then, Michele, you'll appreciate, this was the 2012 era. Fintech was not necessarily coined yet; it wasn't mainstream. So this used to be covered within the broader FIG umbrella. Payment processing, and the bread and butter for us used to be the banks who at that time had acquiring arms, and they were looking to sell those arms because, of course, they were just recovering from the 2008 crisis. And they needed that cash, right? So the names that are very familiar today, people probably don't recall as much, but WorldPay came out of RBS, a leading UK bank. Similarly, Nexi in Italy. Similarly, Nets in Copenhagen, right? So this was the bread and butter for Deutsche and other bulge brackets. This was also my first exposure, right? What really payments means, what the various stakeholders are, right? What's the role of Visa? What's the role of PayPal in the ecosystem? And I really enjoyed it, and did that for 5 years. And I was like, okay, if I want to do more, where should I go? I should probably explore opportunities in a payments company, right? And I can bring transaction skills, M&A to that potential employer, right? So this was me cold calling over LinkedIn to the head of Corp Dev and Ventures at PayPal, like, hey, this is me, and this is Ashish. This is what I've been doing, and I came up with a list of companies that he should look at. And I think the interview process went well only because most of the conversations focused on those names, and nobody went any name beyond. Otherwise, it would have been So I think that was now back in 2016, right? So I've been here, one of the early members, and we've been very lean from day one. I think obviously that brings in a lot of challenges from a bandwidth perspective, but also from a learning curve perspective. You see a lot. I think I've been very fortunate to work with mentors and executives who have given us the room to sort of make mistakes, right? Make mistakes and learn and make your own point of view of the world, right? So now, I mean, just to recap, PayPal Ventures is a Series A, Series B global fintech investor. This is our 9th year. We have done about 80 to 85 portfolio companies now in that journey. So we look at about we meet about 2,000 plus companies a year, of which we at best will invest in 10 to 12 new companies every year, and the mandate is truly global. So I lead the London office, which covers all of EMEA and APAC, and we have offices on the ground in New York and SF. Again, we have a single IC. We all debate all deals together, whether it's a Berlin deal or a Bangalore deal or a Brazil deal, and that's also our value add to the founder. Like, hey, when you decide to bring us on board and give us this opportunity, you will be assessed and benchmarked against the global best-in-class players, not just your home country or home city players.
Yeah, no, that's pretty interesting. Before coming back to PayPal Venture itself, let's just focus on your experience directly. So, how was the kind of transition between, you know, a role in a bank like Deutsche Bank, doing payments there, to PayPal actually. So the kind of environment is actually totally different, you know. So how was that kind of transition over time?
It was hard. I would say. I think you can appreciate there was a lot of. Now I didn't know the name before, but now as I read, it's called imposter syndrome. Like, hey, why am I in the room, right? So, and you're surrounded by with seasoned operators, executives, and investors. So you see, by the virtue of being in the room, you absorb a lot, right? You see a lot, and I think over time I got to see that as an opportunity to continue to push and learn, and it's been a very steep learning curve. I'll be also honest to admit, and I think, but the more you see, the more you bring into practice. I think it just, I mean, that's why I think this venture capital is more of a business of practice, is a craft, right? You always get better than where you were before, right? So I think that's been the journey, and I think, again, this is my 13th year fintech if I include what I did in Deutsche and PayPal. I think if I look back, if you ask me, like, Ashish, what themes would you have invested in the 13 years? Of course I have an answer. Yes, we'll discuss that, but it's also hard to really say, okay, I know what 2026 2027 is going to look like, right? So what I do know, I think what I've worked for me is nurturing the relationships, right? So for me, what has proven, again, everyone operates differently. For me, what has proven very valuable is the trust and the relationships that compound, I would argue, better than capital, right? We have people now where I can rely on, and vice versa, for keeping us honest, keeping us in the loop, and across these markets, right? Like UK, Europe, India, GCC, Southeast Asia. It's hard otherwise to look at this ecosystem just from London. It's not scalable unless you have those relationships and the network to help you.
It has always been a relationship, you know, based kind of work, you know, this one. Even if you can scale, you can use all the data that you want. In the end, you know, you will need to talk with people and to be in the loop and in the right room when those kind of conversations happen.
Absolutely.
Yeah, no, I totally agree on this one. Coming back to the fund itself, so PayPal is obviously a payment company, probably one of the most well-known payment company in the world. And you know, the fact that you guys are also trying to invest in other payment company, in fintech companies overall, I think it's a very good sign of the kind of ecosystem that we're building in fintech globally, you know, under that perspective. So I wanted to understand, what do you think a payment company out there or a bank out there should do in order to promote this kind of movement and this kind of environment? You know, you guys are doing that at PayPal using capital and using your skills, but we don't see many companies out there doing the same. You know, maybe more recently we saw a couple of examples, but what, you know, other kind of traditional companies maybe try to do under that point of view?
I think it's an excellent question. I think corporate venture capital, the CVC terminology, it's very well known, but the models within that umbrella varies significantly from company A to company B to company C, right? So I think there's no right or wrong. I think what is absolute must have is alignment, right? And clarity. Why do you exist, right? What is your success variables and metrics? It's very important for the ventures group to understand that, but also for the corporate to be aligned, and equally externally to be aligned, right? So what this again, I mean, you would have heard that, Michele, like, I mean, investments are more like marriages, right? If you're going to sit somebody across the table for 10 plus years, you don't want to lead with mis-selling, if I may, right? You want to manage expectations, like, hey, this is what this capital could unlock, and by the way, this is what we might not be able to do, right? So and again, going back to the relationships and trust, like, you need to make sure, like, you are radically transparent with the founders and the external ecosystem what you're trying to achieve. And the more they see you in practice, they will again, action speaks louder than words, right?
It's a matter of expectations in the end, you know. You must be very, very clear and transparent about what you can bring to the table and what you can expect in return from those companies.
Yeah, and I think again at the same time, again, Michele, you'll appreciate we are a publicly listed a business. We have a fiduciary duty to PayPal shareholders on the returns on the capital that we do deploy, and that cannot be superseded, right? Every decision has to be decided. Hey, is this the best use of capital, and what returns are we generating on a capital that belongs to our shareholders, right? So I think that keeps us honest. Again, I mean the investment world have gone through these peaks and troughs, and again, sounds like we are back on the peak.
Maybe we're getting back to the peak again, and I fear those kind of moments, you know.
It looks like it. It looks like it. I mean, I'll take the markups in the portfolio for sure. But again, I think like coming from the public markets background, it helps us like, hey, what could be the value for a business? Not now, of course, the early stage, right? But 5-10 years, what a corporate would want to pay, what a strategic would want to pay, what an IPO would look like, and that helps us align on discipline on what we should do and what we should not do.
No, that's absolutely interesting. So hearing what you just said, it seems that like the exit strategy, or at least the long-term perspective for a company, is one of the main investing criteria right there. You know, trying to understand where a company could be over time in your side is one of the important things to take in consideration. Maybe not just the exit strategy, but at least not trying to understand where they could be over time.
Yeah, I mean, I will. I mean, especially Michele, for me in my markets in EMEA and APAC, we are seeing some. I mean, a lot of push for reform, capital market reforms, right? I mean, India and GCC within UAE and the Kingdom of Saudi Arabia, they are exceptions, right? In these three markets, the IPO ecosystem continues to be very open and accessible for founders. But otherwise, for most of Europe, unless you go into the US, the most likelihood for an exit opportunity will be an acquisition by a strategic or a trade sale to a PE, right? And then again, I think putting ourselves into that shoes, like if I am that strategic, which again we did that role for PayPal, and when I acquired iZettle for $2 billion plus, what would that strategic would want to look for, right? It's not entirely always about P&L, right? So it could be like, hey, you are solving for a product that I don't have, and it will take longer for me. Or you are bringing a new market that I don't have. Or by the way, you do that, plus you have a scaled P&L, so you help me grow faster. But at the end point, the strategics are answerable to their shareholders, so they're always going to be this tussle of what I can pay, right? So I would say it's an important variable. Of course, it's not the only variable when we do that assessment.
Yeah, of course. You made a very good point about the IPO market, mostly in Europe, and being being in London. I think that there is one question that is quite obvious from my side. Do you see London coming back as IPO square in the future or not? Because there's a very strong topic against it at the moment going on.
Yeah. I mean, I would say, maybe we tweak it a bit, right? So I would say, does London have to? Answer is yes, and yes, right? So again, I think fintech definitely in the UK has been a deeply ingrained, as well as I think the regulatory ecosystem is very supportive. I think the challenges has been like you seed those businesses and they get to a scale, but what happens once they are beyond a certain point? And that's where again, I don't need to repeat the stats where folks have found more deception from capital and investors outside UK, right? So I think that will change. We already see a strong push. It's just very hard to point like when would that show up, right? Is it 2 years away, 3 years away? I think that's where I mean, as a VC, we like to operate on the micro, focus on the founders, and macro. Again, I think it's not something we can influence. But again, if you solve for the underlying strength, are you building something which has unique demand in the market? Your unit economics are under control. You will always have avenues to explore, right? But again, it is a big topic in our portfolio companies as well, and I sincerely do hope we see London coming back.
Yeah, I think it would be pretty useful also for the rest of Europe, to be honest, because I think that we miss a strong financial exchange or financial square, basically financial place in Europe at the moment. We have local point of interest, like Frankfurt, like Paris, like Milan, but we don't have a strong place where companies can actually go and say, okay, I can actually list and I can actually take in a lot of capitals to grow and to expand and everything. I mean, right now, for every big company in Europe, I think the obvious option is going to the US at the moment. And that's a problem we need to solve. It's not just a matter of fact, it's a problem that we need to solve over time. But you touched upon another very interesting topic. You were talking about the kind of things that you see in a founder when talking with them and when deciding to invest. So I would like to understand which are the kind of things that you actually see in a founder, or which are the kind of things that you are actually looking for in a founders when trying to invest or when deciding to invest.
Yeah, it's a loaded question, if I may, right? So but I'll take a shot at it, right? So I would say, again, I think you have to appreciate, like, again, this is from a fintech,
absolutely,
fintech first lens. Not always it's going to be to the top and to the right? I mean, I'll give you an example. In 2021 and 2022 first half, this was the best time to be a fintech investor, founder, raising money, right? But then the opposite happened in the next 18 months, where nobody wanted to do anything with fintech, right? Again, there was excess done. We all seen the numbers and so on, but and this is where it's important to be resilient and saying, hey, I am focused on delivering the P&L. I'm focused on delivering a value to my customers, and all the noise is literally a noise for me. And again, I think and now you see again it's coming back, right? These cycles will happen, but what we all know, I think hopefully everyone appreciates as well, that fintech opportunity is still, again, we are we're only 2 to 3% done, right? I mean, so the opportunity that I like to believe, when I speak to founders, is like financial services is actually a sector which is TAM unconstrained. TAM is not a constraint for financial services. And if you do well, and if you again are resilient and solving for doing the right thing the right way, you will emerge as a winner, because there's a lot to be done and a lot of the experiences which are still manual, broken. So resilience is definitely top of the list, right? So number two is obviously then comes back to, like, in these markets, it's hard to have a single line of product, right? A single revenue line. I mean, again, US market in that perspective is again a beautiful market, right? You have rich interchange regimes which don't exist in Europe, UK, or most of Asia. So how do you make sure that you can iterate fast on new products, right? Launch new services. Look at what Revolut has done. Revolut, I'm a 2017 customer of Revolut when it was effectively an FX card, right? Today, I don't think there's anything they can't offer, right? So and that's been a journey for them for the last 8 years. Product velocity. I mean, that's true for every sector per se, and every geography per se. But I would say more so in financial services, where we I think there's a natural secular pricing pressure, right? So if your product, your core product, your launch product is maturing and seeing pricing pressure, you should have started thinking about your product 2-3 years ago already, and so that this product can feed you and take you to the next growth trajectory, right? So I think that product velocity is key. And thirdly is, again, I think I don't know, this is said often, I have to say it again, is licensing and compliance is a moat, right? It's I think it's it can be perceived as why should I bother, right? Or kind of perceived that is slowing me down, but that is your muscle, that is your moat, your relationship with the regulators, your licensing strategy, and how you think about which country to go next. Those things, again, in financial services matter a lot. Are you able to have a conversation with the stakeholders across the table, right? And less relevant, of course, when you are in unregulated spaces like software, but financial services, that's non-negotiable.
Yeah, that's a very interesting point. I mean, do you think that those kind of regulations, because this is a point that I make very often, do you think that those kind of regulation in Europe is like helping the kind of fintech environment and fintech startups overall, or do you think that they are pushing us back in terms of velocity and in terms of growth? Because to be honest, I believe that the reason why we have so many good digital bank and neobanks in Europe is probably also the regulation that we have in place compared, for example, to the US.
Yes.
But you know, there are people out there thinking, okay, regulation is pushing us back in many fields. So there is this kind of dichotomy between the two. What do you think about it?
I mean, again, I think I will give you an analogy, right? It's not perfect. It's not technically true, but you have to appreciate the whole e-money institution regime.
Yeah,
is unique to Europe. Europe was the one which came up with a regime, and then it got transported to the rest of the world.
Yeah.
And it's been around for what, 10 years, maybe 12 years, or maybe longer. And that's been the key variable that has allowed incumbents, non-bank players to enter the financial services, especially in the payments ecosystem, and digital wallets to do what they're able to do. Like that's what Monzo did in the first days before they became a digital bank, and Revolut did. And would I say there is some analogy to what Genius Act does? I mean, stablecoin, you can argue, is digital money. It's backed by reserves, but it is digital money. Yep. And you could argue like e-money that Europe had already existed for 15 years, right? So I think where I would argue, I think Europe could do better is continue be that front runner, right? Where's our next big change similar to e-money that we did 15 years ago, right? So how do we make sure that we are ahead, which we have shown in the past that we were, right? How do we make sure we remain progressive and we keep keeping up with the ecosystem and what's happening in the rest of the world and move fast, right? I think the technical talent in the ecosystem, especially in the payments and financial services, is at par, or probably I would argue ahead of the rest of the world, right? The question is how do we empower them?
Yeah,
do we make them relevant?
I think it's a very fair point. So we have examples in the past of regulation that actually pushed the innovation, but we also have the opposite. So the real question is, how can we actually take the good part of the regulation that is bringing also innovation? And that's a very hard question to answer, to be honest. But you just mentioned probably the biggest topic on the table at the moment for payments and venture overall. So let's talk a little bit about stablecoins. I think that you probably met more stablecoin companies than people recently.
No, again, I think I mean if you look at the underlying thesis on what they are trying to solve, I mean, there is very hard to argue, right? Like why stable coins should exist and operate the way they are operating. There are obviously certain use cases where it's like fantastic product market fit, right? Cross-border payments, like and this is 2025, right? So we still have to rely on multi-day settlement with obscene high fees, and you would think that's done in the past. Of course, the likes of Zoom, owned by PayPal, Remitly, Wise, have all moved in a direction where it's becoming faster and cheaper to do that, right? But the truth remains that if you add all the players up, they are still shy of 20%, right? So the 85% of the market is still going the old school correspondent banking world.
Very traditional, yeah.
And I think this is where I think we will see more and more applications. And I think arguably the question here as an investor is, I get the application of stablecoin to this problem statement, but how would this be? Where are the pockets to create a moat, right? Where's the pockets for you to do something unique, which other stablecoin cross-border payment companies are not able to do so, or for them it takes longer. For example, like again in the remittance world, in the fiat remittance world, I mean there are tens, if not hundreds, of them companies, right?
Yeah.
So maybe, and everyone is doing well, like because the underlying demand is so huge, and you're taking market share away from the banks. So there's enough room for everyone to play in. Could you argue that the same going to hold for stablecoins? So yes, okay. So maybe it's not hundreds. Maybe there's going to be tens of cross-border stablecoin companies existing. I would argue yes. Everyone will have certain corridors that are strong for them, right? Somebody will be good at Africa in and out. Somebody might be strong in GCC in and out, or vice versa, or Asia, right? So that's obviously one use case. I think the other use cases are, I think, again, I tend to have a more a B2B lens of the world. So I would say the other use cases that we see is more intra-company movements within your subsidiary, which is, I think, I would argue that's more sticky. And the more there is, how do you penetrate? Once you're in, you would expect that unless you are able to not service the clients, they will want to stick on, right? So our portfolio companies have 20 subsidiaries in the world, right? That company has a person in the CFO office whose job is to look at the cash balance across those 20 companies. There is a regulatory capital requirement because you might have a payment license in a certain country. How do you make sure that your payroll works well? You have to fund them. So you might be overfunding them, or it would take you 2 days to fund them. That's a classic case where stablecoin come in and saying, hey, let me help you with that, right? So, and then I think a sub bracket of stablecoin, if I am Mikhail, I think this is an extension to is the tokenization, right? I mean, stablecoin is the tokenized money market fund. Effectively, what it is you have US treasuries who are the collateral, and then you are labeling stablecoins on top, right? So, and tokenization in the world of capital markets, I think we have heard number of very exciting announcements from the various players across the ecosystem, whether it's NASDAQ or Robinhood. I think those are pieces which, again, we are very early days. We are very infancy days, but I think those could really materially unlock things that in the capital markets today either takes too long or it's expensive to do.
You're mentioning the tokenization of private equity and private assets, basically. So everything that is not
public markets.
Everything that is not public yet could potentially be on public market, if tokenized and made digital, basically. So that's a very, very good point. At the same time, I think it could potentially open a new field of opportunities for startups that are not, in the size of being public, but they can actually take the advantage of, acquiring external capitals by tokenizing their shares. I think that there's a very good, thread about this kind of topic, and that could potentially help them a lot. But I would like to focus a little bit more about the first part on stablecoins. Do you think, and do you see, for example, stablecoins being part of the internal hand-to-hand flow for companies? For example, one of the major trends about stablecoin that I keep hearing about is, the end-to-end flow of stablecoins. So from the book of the company, making the payments, landing on the other side, everything done with stablecoins, keeping on the book actually stablecoins at the moment. Do you see that happening in the near future?
Yeah, I think that's where I think the Genius Act gives the clarity to the corporates, right? Like I think the fact that it's not, and I think it was part of the clarity in the act that allows you as a corporate to hold stablecoin on your balance sheet. I think the question end to end, Michele, will depend on like, hey, can a company, are we at a stage where the companies can start making payments or payroll to their employees, or doing their accounts payable to payments to their suppliers in stablecoin, and there is on the receiving side, the employees keep their money in stablecoin. They never do the off ramp into fiat. I think that's going to be a journey, right? Again, financial services is a very intimate topic, right? People have a very different relationship with money, and that varies significantly across where you are in the world. So I think the true magic of stablecoins really gets unlocked when there is no off ramp, right? You sort of earn. I mean, we've heard now use cases where the freelancers are opting to be paid in stablecoins. And there are folks who are offering you a stablecoin issued card, so you don't need to even off ramp from a stablecoin to your respective currency. You can be traveling globally, and then at any place where Visa and MasterCard are accepted, you can tap your card or use your card as you would do if it's a fiat card, right? So I think the infrastructure is being put into place. The question will always be around consumer or customer behavior and adoption, right? I think that's, again, it's going to be a multi-year journey. And certain use cases might see faster adoption, certain countries might see faster adoption, certain corridors might see faster adoption. But as a whole, I think it's just going to be a function of, why should I? What's in it for me, right? Should I just do it because it's cool, or there's an economic benefit for me to be able to do so?
Yeah, no, it's a very good point. I would like to come back to a more personal review from your side. So you've been doing, and you've been talking about 30 years of experience in this field, but I would like to understand and hear from you about the most interesting deals that you did over time. So which are the ones that remain in your heart over time, you know?
Yeah, I think it's gonna be hard, Michele, because you're gonna put me in a position where
you have to make names, so it's gonna be hard there.
And my phone is gonna start ringing. I would again say, I think where we have seen, if I draw a pattern or things where we have done well compared to others, I think there's a commonality, right? Either you are a misunderstood asset, or a founder where there is a lot of noise in the broader, maybe, if I may, in the landscape, right? And other folks that you have engaged with have bucketed you in a certain way. Okay, company A, this is what you do, because company B and C also do that, and people have not done the work to actually spend time.
Maybe a wrong comparison under that point of view. You're the next, I don't know, Facebook, you're the next TikTok, and instead you're going in a slightly different direction.
Right. And I think, again, it just it's fair, right? I mean, because there's so much going on. But I think where we've been able to, I would say, create alpha is spending time just truly understand. Maybe that's where the conclusion might come after we do the work, right? So we never shied away from doing the work, right? So finding founders in pockets which are not necessarily where you would expect founders to be found typically, right? So we have Cologne, we have a portfolio company in Cologne in Germany. Now, again, I think it's a very healthy ecosystem, technical skill set from the universities, but you don't think about Cologne, right? You think about Berlin and Munich, right?
Yeah, exactly.
So we have companies in Cape Town in South Africa, which is, again, doing fantastically well. Again, you don't go out and hunt for
companies in South Africa usually.
So what I think we tend to be more thematic in our work. Okay, so this is the space where we want to spend more time in, and then we try to speak to founders in that theme, irrespective of where their HQ is, right? Because, again, we are a global fintech investor. We are not a US fintech investor or a European fintech investor, and it allows us to have a global lens. And I think so. I think that's where I think if it's a popular trade, if everybody is going into the same model, then you can expect the pricing will be inflated, right? You would not have being able to build that deeper relationship with the founders, and vice versa, because, again, the founders need to be able to trust you, and again, and for the investors to get comfort with the founders.
Yeah, I think it's a mutual relationship under that point of view. You can have the wrong investor on your cap table. You can have, the wrong founder on your portfolio. That's kind of a mutual relationship over there. Otherwise, it's going to be a bad situation sooner or later. But you touch upon a very interesting point about valuations and about inflation on those kind of valuations. I think that recently we started to see again a little bit those kind of crazy numbers that we saw in 2021 and 2022, 50 times the revenue, 200 times the revenue, something like that, that is going to make someone cry sooner or later. I'm pretty sure of it. So do you see that kind of environment coming back again? Because I strongly fear that moment, to be honest. I still remember, the valuation that we had in 2021 in fintech, and they were absolutely crazy, no sense at all. Then we came back a little bit to earth, taking a look at fundamentals and basics, economic and everything. And I say, okay, maybe, we come back to normal mental state, and now we are seeing again in certain kind of verticals, of course, more specifically, like, for example, in AI or sometimes also in stablecoins.
Right.
But overall, I fear the moment that we are seeing again those kind of numbers.
Yeah, I mean, again, I think it can be very easy to cherry pick few deals and some numbers to grab those headlines, right? I think and I mean, those multiples, it always boils down to what's in the denominator, right? So I think some of the deals that have been done in the past don't look so obvious, right? I mean, whether it was Facebook's acquisition of Instagram or WhatsApp, you would argue what multiples were those, right? So I think it's a fair concern and it's a real concern, but I think looking purely from a multiples perspective might prove to be short-sighted, and I think they always benefit to operate. Hey, what's the margin of safety, and what outcome could look like, and walk back from there, right? So I think for us, again, it does brings back to the point where I was trying to make before, where we are part of publicly listed business, right? And hence it's very hard for me to get that muscle that, hey, this could be valued at X, Y, and Z, when public markets are valuing it at 50, like half of that X, Y, Z, right? So that helps us to keep us honest and keep us real. And again, we demonstrate the same. We're not going to be the investors who are going to win the deal by paying the best price. We rather focus on building the relationship with the founders and ideally add value before we are on the cap table. Do all that right to be on the cap table, right? So it's a process. Is it always perfect and have we delivered every time? I would love to say yes, but it's not the case, right? So but again, that's the motion we try to adopt.
Okay, I have the last question for you, and I think it's going to be a pretty complex one. So you said you've been talking about the 30 year of experience that you've been passing in this industry, from corporate to VC and working with startups. So I would like you to give an advice basically to two main people out there. The first one is to the founders that are approaching people like you and venture capital like you, on when to, for example, approach them and what to actually show when, making this kind of conversation. And the second advice is to someone else that is actually trying to get in this kind of field, that is either in the field of payments, in VC, or more in general in financial services. So I would like you to give those two kind of advices.
No, again, I wouldn't say call it advice, but I would say, again, on the first piece, again, it helps to speak to the ecosystem, right? I mean, now we have 80 plus portfolio companies, and within I've done probably 20-25 investments in that period. It's very hard for me to hide from the feedback of my founders, right? Of the companies and co-investors. So I think for anybody who we engage with, our foremost request is, like, please do reverse reference checks on us.
Due diligence on us, basically.
Right. Please speak to any founder in the portfolio, and we obviously hope the founders have good things to say, more good than bad. But that's absolutely critical, right? I mean, as an investor, I'm biased towards, hey, how good we can be, right? But the ground reality is delivered by folks who have seen you in action, right? So I think that's one. I think from a the stage perspective, if I may, I think the question was. So I think we Series A and B, again, alphabets mean very different things in different parts of the world. But I think our entry ticket size is US $5 to $10 million. I think at an entry, whenever we come in, our the entry revenue scale is a couple of $1 million to $2 to $3 million, and growing 100%. I think somebody who's at 25 million plus revenues is probably too mature for us. So that's the range we play in. And again, I think there's plenty in that space to keep us busy. On the second piece, I think the question was somebody entering into
someone that is actually hoping to enter in the financial ecosystem, that is either payments or VC directly.
Right. I would say, again, I think the world today is to do that is the barriers are far lower because firstly, I think the information is so easily accessible, and now further so thanks to ChatGPT, and then I think you can actually start being an investor or operating like an investor with nominal capital, right? Because again, you have to appreciate that this is a business where you are expected to have a point of view. You're expected to have a core network or relationships, which necessarily are not a function of capital, right? And when you go in front of anyone like, hey, this is who I am, and this is my book of business, this is what I've been building, it becomes a far more interesting conversation than saying, hey, I want to enter this profession but I haven't actioned anything yet. Because again, this can be very lonely profession otherwise. So you better have a community or a network around you for everyone to support each other.
In the end, as we said in the beginning, it's a relationship-based, kind of work. Either you're in payments or you're in VC, you need to speak with people in the end. Ashish, it was a very big pleasure to have you in the show, and thanks again for the conversation. It was very, very interesting. I wish you the best for your upcoming investment, and thanks again for being here. Absolutely, and let's catch up again at the next event. Bye bye.